Yo, what's up guys? Welcome back to the channel. In this video, I'm going to be sharing with you the ultimate dividend growth stock of all time, and I really mean that. I'm going to be showing you all the numbers to prove it, and most people when they look at this stock, they're going to be like, well, it's at all-time highs. I'm really going to avoid the company. But no matter what metric you look at, this company is undervalued, and it's so impressive. I can't wait to share it with you guys. Look at the forward PE ratio of 14.64. Even if you don't look at the forward PE ratio, the trailing 12 months PE ratio is 17. That's cheaper than literally every other stock. And here's the thing, they're growing their EPS like crazy. And they just started paying out this dividend. So for a company that just started paying out a dividend for the past year, their dividend yield is only 1%. So that's the only one thing that investors may not like about the company is that the dividend yield is only 1%. But here's the thing, if we look at their EPS or net income, the payout ratio is a 13%. Look at this, they made $8 in the most recent quarter, just in one quarter, and their dividend is less than $2. So they can pay for their entire year of dividends just in one quarter of EPS. And that's a payout ratio looking at their net income. Let's go ahead and look at the payout ratio based off their free cash flow. I like looking at the free cash flow per share. They made $15 in one quarter. And imagine the payout ratio, and their dividend only cost $1.63. So that's what I'm saying. No matter what metric you look at, their free cash flow or net income, this company is crazy, and they're growing their net income too. Look, their net income is up 20% year over year. Their EPS is up 24% because they've been buying back their own stock. That's the thing. Since they're not having a super high dividend payout ratio, they're buying back their own stock like crazy. So let me show you that right here. So remember, they just made about $1 billion of free cash flow in the most recent quarter, and they spent $415 million of stock buybacks just in the most recent quarter. So I love companies that do dividends and stock buybacks. So they spent $415 million on stock buybacks, and literally their dividend cost $110 million. That's literally nothing. So they're spending 4 times the amount on stock buybacks than dividends, which is pretty cool. We can look at their total debt of $12.4 billion, which is up 6.5% year over year, but they also have cash on hand of $400 million. So look at this. They have cash on hand of $420 million, even after choosing to buy back $415 million of their own stock. So if they didn't do that, if they didn't buy back their own stock, they'd have $800 million of cash. But that's the thing, they're committed to giving out all the money that they're making to shareholders. And that's the thing. I wouldn't buy this company if they were trading at a crazy high valuation and they had a crazy high payout ratio. They don't. They literally have a forward PE ratio of 14. And let me show you some other real stats that I think are super important to understand about this company. So here's United Rentals, market cap of $42 billion. They have a free cash flow yield of 6.23%. And I forgot to show you this earlier, but yeah, they've bought back 3.13% of the entire company just in the past trailing 12 months. Imagine that. So you now own 3% more of the entire company on top of the additional 1% cash return you get through a dividend. So your total shareholder return in the trailing 12 months was 4.15%. And we can see that they can easily afford that based off their free cash flow yield, and their earnings yield well covers the shareholder yield. In most companies, when they're trading at a low PE ratio, it means that they're not expected to grow their EPS. But here's the thing. United Rentals is expected to grow their EPS a lot. And remember how they traded a low PE ratio? I still want to do a multiple off this. So we're going to do a multiple based off this $57 of EPS. So let's do 57 times 17. That's a $969 stock price based off the $57 of EPS. Remember, that's not crazy unreasonable because today the stock price is $630. So that's not like too unreasonable. And if you don't know who United Rentals is and what they do, I'm going to quickly go over that. I'm going to show you their most recent investor presentation. I'm just going to show you the highlights in my opinion. So they are actually the #1 market share. So they own the most market share out of all the other companies in their space. You like rent out stuff from them. And check this out. They have a fleet size of $21 billion. Market cap of $49 billion, 26,000 employees. I mean, this company is actually huge. So it's not like I'm talking about some company you've never heard of. This company is worth $49 billion. It's a huge American company. So these are the things they actually rent out. So it looks like their huge fleet is mostly forklifts, aerial, dirt, trucks, stuff that all kinds of customers need is actually down here. Oh yeah, here are all their locations. But let's see the actual customer mix. So they got, multifamily, private, power utilities. They have all kinds of customers. And I like that the multifamily is literally just 5% of the entire customer mix. I like that it's still part of it. I like that it's 5% though. They could grow it to 10% over time or something. I don't really know. But I like to see that, they have all different kinds of customers. But at the end of the day, this is the kind of stock I want to own. This is one that should have great total shareholder returns. It may not be perfect for those that are seeking high income because the dividend yield is only 1%, but the company has appreciated so much because they're spending 3 times as much on stock buybacks and dividends that you don't really care about the low dividend yield because you're most likely up like crazy on your shares. And they're trading at a low multiple right now. If you want to get in at all-time highs, and it's not even at all-time highs, but they're not even trading at a crazy valuation of only 14 times earnings. And that's the kind of stock that I would want to own. Here in my Robinhood portfolio, I specifically own stocks with super low dividend yields, but also low payout ratios and have so much room to grow the dividend, and they do stock buybacks. Like this company right here. This is actually my largest holding, ticker symbol CSL. This is another one of those companies that they can pay for their entire year of dividends just in 1/4 of EPS, not even free cash flow. So even though the dividend yield is only 0.8%, they have so much room to grow it. That's just what I love about the company. Anyway, let me know what your thoughts on this stock is in the comments. I'll make sure to check all of them. And don't forget to hit the like on the video. It really, really would help me out a lot. And I will see you guys in the next video.